Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of June 10th through June 14th, where we'll try to help you make money during the June Federal Reserve interest rate decision, as well as make money trading in any market conditions. So again, thank you for joining us for part one of our weekly trading game plan for June 10th through June 14th. And let's again discuss how we can make money trading during the June federal interest rate decision. So let's get started. Welcome, MD. Thank you for joining us in the chat today. Hope you had a great trading week and are doing well. So here's our Google document with our notes for part one of our weekly trading game plan for June 10th through June 14th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, our trade ideas. We keep all of our weekly trading game plan notes, Google documents in a publicly accessible Google Drive folder. So you can refer back to the notes from this week as well as previous weeks. And you can find direct links to both this Google document and to that publicly accessible Google Drive folder in the description box below. Welcome to Ricky Khan. Thank you for joining us. Hope you're doing well. So first we'll look at how the markets ended up on Friday. It was a pretty volatile day, kind of choppy, so pretty much flat. We see all the indices ended up just slightly negative, but again, it was just pretty choppy, pretty flat. So the Dow down 0.2%, NASDAQ down 0.23%, S&P down 0.1%. But under the covers, we had a lot more decliners than advancers, so 74% decliners, 22% advancers. We did have 63% new highs, 36% new lows. Got kind of a split around the 50-day moving average, so only 51% above, 48% below. And we still got 64% above their 200-day moving average, 36 below. And even though it shows bullish a little bit, it was pretty neutral, pretty choppy during the day. Look at the heat map. It was kind of, again, a split among the Mag 7. So NVIDIA pretty flat. It was up and down during the day. Microsoft pretty flat. Apple, slight gain, probably going into WWDC. We'll talk about that. Amazon, slightly negative. Tesla, slightly negative. So financials recovered. They're down a little bit and then back up. Similarly, industrial's pretty flat. So negatives, real estate, utilities, energy, communication services, very negative with basic materials. Again, we got the jobs data on Friday, and we, as we'll see, we got a big surge in bond yield. So bond prices dropped, bond yields popped back up. So now the 30 is back over 4.5. The 5 years 4.45. And the 10 at 4.43. So again, we still got that slight inversion between the 5s and the 10s. But again, 3%, almost 4% jump in bond yields for the short end of the curve. So definitely hit any interest rate sensitive, any bond yield sensitive sectors like real estate. Welcome, Walter Lyons, LinkedIn, Easy Mike. Thank you all for joining us today. Hope you all are doing well. Yeah, we'll look at in more detail about the jobs data that caused this surge in bond yields. Also caused a major breakdown in gold and silver. So we saw gold broke down all the way to 2311. So down below 2350. It's now got support at 2300, resistance at 2350. So I expect a retest of that 2300 level. If that breaks down, then we've got quite a ways to fall, and we'll see that in the futures. Natural gas, pretty volatile, but it bounced back up. Didn't quite test $3, but again, my humble opinion, it'll probably test $3 again with some significant volatility. Oil broke down below 75, then recovered that 75 level. So 75 is pretty much support, 80 resistance. If it breaks down below 75, then we could see a drop to 70 or so. Again, we see the futures all pointing slightly negative. Again, much more negative on the Russell. Small caps, much more sensitive to needing rate cuts. And we'll talk about what the economic data means in terms of the potential Fed interest rate decision, June interest rate decision in terms of rate cuts. So if we look at each of the major indices and then the technology components, and again, just a quick reminder, you can find these links in our notes documents, also in the screeners tab of our ETFs and Watchlist Google Sheets. So look at each of the indices. See the Dow's actually pretty flat. It's just been oscillating between that double top. And this trend line support's pretty much sitting at its short-term moving average, so just kind of oscillating around that. I expect, again, the Dow to be pretty flat, just kind of oscillate around that moving average. Very similar for the IWM, although, again, it's going to be weaker due to higher bond yields, needing interest rate cuts. So, again, if we'll talk about the effects of the Fed June interest rate decision as we go into our strategy section. But again, IWM, I expect further weakness, further breakdown if there's no indication of a near-term cut. SPY's just kind of hovering along this upper trend line, keeps retesting, making new highs. So again, just kind of, bouncing around along that ceiling. Got support down here from the lower trend line, the moving average, tightening oscillations, but again, trending slowly, melting up, slowly upward. Technology cues much stronger, so again, in a stronger upward trend, making new highs. Again, got plenty of room above its moving average. A lot of this driven by NVIDIA. Got the NVIDIA split, goes into effect on Monday. And we could talk about some more effects of this. But again, technology in a much stronger uptrend. And we've seen that buying the dip in technology, particularly in NVIDIA. If we look at the technology components, again, ARK-K not really going anywhere. It's in a narrowing wedge below its moving average, kind of oscillating around its lower trend line. Again, trending somewhat down. You can see in the moving average. So again, just not really going anywhere. The FANGs making new highs. Again, a lot of that driven by NVIDIA. Again, we've got some uptrend in Apple going into WWDC. So again, FANG-U made a new high. It's, again, continues to retest that upper trend line. Got support from this longer-term moving average. Did break down briefly, retest that moving average, and quickly bounce back up. Biotech, not as strong, and again, more sensitive to needing rate cuts, needing lower interest rates. So it tested the upper trend line, got rejected, bouncing back down, getting support from the longer term moving average. So again, I'd expect it to bounce down, retest that. Again, we've got a narrowing wedge for biotech. It'll probably continue to oscillate within that wedge on a tightening wedge basis. Semiconductors, again, strong with NVIDIA. Didn't quite make it up to that double top again. Slight rejection, slight correction. It's got a strong lower trend line support. So again, I'd expect it to continue to test that double top until we get some major correction. TQs, just like the Qs, so just the leverage long. Broader technology not quite as strong, so we see this oscillation, tests the longer term moving average, tests the upper trend line, gets rejected, bounces back down. Looks like it didn't quite make it back up to that upper trend line. We've got a pivot point. It's oscillating around that pivot point. So again, the broader technology not quite as strong. It's, again, mostly driven by the Mag 7 and NVIDIA. So I hope that all helps. So if we look at the groups and the sectors and the industries in FinBiz, so we see, again, mostly red, very red on Friday. So even though the indices themselves, again, there's so much driven by just the Mag 7, that even though almost all the sectors were red, the indices were pretty flat. So the strongest was technology, somewhat financials, weakest utilities, materials, again, gold, silver, copper all broke down, real estate, utilities, again, your interest rate sensitive sectors, energy negative, breakdown in oil. For the week, technology, communication services, again, mostly Mag 7. Weakest, again, utilities and energy, basic materials, very negative. For the month, again, technology, see real estate was positive for the month, but again, with the bounce back in bond yields, very negative for real estate. So I saw a significant correction at the end of the week in real estate. Again, energy's been weak. Again, real estate weak for the quarter. Again, technology, utilities were strong, so there's a significant correction in utilities. So if we look at the industries real quickly. So again, not a whole lot of positivity, even though, again, the indices were pretty much flat. Semiconductors slightly positive, some medical. REITs are going to be pretty negative. Banks, somewhat negative. Again, REITs, oil and gas, negative. REITs, negative. All the real estate, pretty negative. Again, all on the hotter than expected jobs data we'll talk about. And then all your basic materials, steel, coal, aluminum, solar. Again, solar is very interest rate sensitive. Copper, uranium, and see that major correction in silver and gold on Friday. Silver and gold were quite volatile during the week. For the week, semiconductors positive, biotech was positive for the week. We saw that in the Lab U. Some REITs pretty neutral. Banking slightly negative. Again, solar negative. Basic materials, gold, silver negative. Copper, uranium. Again, a correction in uranium along with energy. Solar was positive for the month. Semiconductors, some REITs again. Silver negative for the month. Airlines, oil, building materials, etc. So I hope that all helps. Okay, let me grab a quick drink and we'll talk about the economic highlights of the economic data from last week, and then we'll talk about the upcoming economic data for next week. Just a quick reminder, as this important economic data comes out, I try to capture it as quickly as possible and post it in the Surf the Markets channel in our Discord. Our Discord is free to join. You can find a free invite in the description box below. So again, as this economic data comes out, I try to capture it, post screenshots from investing.com, the raw data, also capturing data from the FinBiz calendar for like natural gas and oil inventories and any important economic news, like we see the ECB cut rates by 0.25%. Also had Canada cut rates, so we've got some of the foreign central banks cutting rates. See again if that has any impact on the Fed's interest rate decision. But again, something to consider in terms of our trading strategies is we've got Europe and Canada already cutting rates, so that should benefit their stock markets, and we can look at some ETFs in those areas possibly benefiting from those rate cuts. Okay, not a whole lot of highlights. Monday through Wednesday. Thursday, we got some jobs data, and it'll be interesting the dichotomy in some of this jobs data from what we got between Thursday and Friday. So Thursday, we got job cuts were less than expected. We got initial claims that was much higher than expected. So on Thursday, it looks like we also got continuing claims a little higher than expected. Productivity lower than expected, unit labor costs lower than expected. So on Thursday, the job market looked like it was weakening slightly. We got more initial claims, got a little bit higher continuing claims, got labor costs coming down. And then on Friday, we get the non-farm payroll data, and it's much hotter than expected. So 272,000 versus 182 expected. So on Friday, again, we get payroll data that shows the job market's much stronger than expected, although we get an unemployment rate that ticked up. So again, we've got some discrepancies, some dichotomy in this jobs data, although in my humble opinion, again, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some minor entertainment purposes only. But again, I think the mixture of this jobs data shows that the jobs market is still relatively strong. We still got, increasing labor costs. We've still got where's the hourly earnings was up higher than expected. So both May and year on year, 4%. So again, job market, in my humble opinion, looks like it's remaining relatively strong, even though we've got, again, these discrepancies in the messages. But again, not something I think the Fed has to worry about, and therefore I think is why we saw that big pop in bond yields. Again, higher for longer. The Fed's not going to cut anytime soon, but again, we'll look at the probabilities for rate cuts or rate hikes when we get to our strategy section. So again, a lot of mixed data in the jobs data, but again, I think in my humble opinion, the overall message is there's no major weakness in the jobs market. So we'll go and we'll look at the rest of the economic data from last week, just some highlights coming from next week, and then we'll look at the full calendar for next week as well. Again, Monday, we've got Apple's Worldwide Developers Conference starting. Again, in my humble opinion, I think we'll see a melt up. I expect them to talk a lot about their AI strategy. I expect a lot of AI name dropping at that Apple WWDC, and I think that will benefit Apple. Apple's also such a major weight in the indices and a lot of ETFs. I think we'll see an upward push in the Mag 7, the technology-driven indices and ETFs based on AI name dropping coming out of Apple. If they happen to disappoint, obviously that would cause a drop in the Mag 7 and consequently possibly in the indices. Also Monday, we've got NVIDIA trading on the split adjusted price. So again, my humble opinion, I think we'll see an inflow of some money into NVIDIA on the very short term based on that stock split. And then I think that's going to wane after that initial inflow. And maybe we'll see a significant correction after that initial inflow of cash due to the stock split. Then Wednesday, again, the FOMC meetings start on Tuesday. On Wednesday, we get CPI data before the Fed interest rate decision, although I expect they will have that data going into their decision. So again, at 2 o'clock, we get their SEP, their strategic economic projections, what's called the dot plot. We get their statement, and then their decision's expected to be nothing, so no change, no hike, no cut. And then we get Powell at 2:30 coming out and doing his press conference. I think we're going to get a lot of attention on the dot plot. They were projecting 3 rate cuts in 2024. We'll see if they dial that back, how much they dial it back. Again, in my humble opinion, I think they're going to dial that back to possibly even 1. But again, we'll look at what the Fed rate monitoring tools show us in their probabilities for cuts or hikes when we get to our strategy section. Again, Thursday we get PPI data and weekly jobless claims data, and then Friday Michigan consumer sentiment. But again, I think Wednesday is going to be the focus. I think the focus is going to be on the dot plot and also Powell's press conference. What does he say? I expect there'll be some questioning about Canada's cutting rates, the ECB's cutting rates. When is the Fed going to cut rates? So again, love to hear y'all's feedback, and again, we'll look at those probabilities in a minute. Let me grab a quick drink. We'll go over the rest of the data for this week and last. I think I saw Sydney Osborne in the chat. Welcome, Sydney Osborne. Hope everyone's doing well. So again, Sunday we got the OPEC meetings. Essentially, they're continuing their voluntary job cuts or oil cuts. So no changes in oil production coming out of OPEC. They did mention a weaker global demand that they foresaw, and it's part of the reasoning for continuing their cuts into through the rest of 2024. So again, that probably contributed to some of the weakness in oil price. Got manufacturing data on Monday. Again, employment was positive, better than expected, but new orders weaker than expected. So, a very slowdown in manufacturing as a whole. Bond auctions, okay. Car sales, a little bit improved. Factory orders, ex-transportation up, but otherwise flat. Okay, and we also got JOLTS, another kind of mixed message in the jobs market, but fewer job openings than expected, fewer than previous. So companies are tightening. They're closing open jobs. Some of them probably filled, some of them probably just removed. So again, job market's tightening up a little bit. The Fed will probably like that in terms of the supply demand coming into more balance. Crude oil stocks up. It was expected to be down. Mortgage rates up slightly. They'll probably bounce again with the increase bond yields. We talked about ADP. So again, another mixed message in the jobs data. So we got ADP non-farm employment change positive, but less than expected on Wednesday. But then, on Friday, we get non-farm payrolls that shows a lot more jobs than expected. So again, discrepancies in the data, again, causing volatility. Non-manufacturing employment, a little less than expected. PMI, a little hotter than expected. And Thursday, we talked about job cuts and initial claims. Natural gas storage was up more than expected, but again, we saw the trend in natural gas prices continues to be up. Friday, we talked about the non-farm payroll data. Baker Hughes, so a drop in oil rigs. So again, we saw a drop in oil prices, and it looks like they're cutting back on supply a little bit, try to keep oil prices up a little bit. Welcome, Logan Flips. Thank you for joining us. Hopefully you're doing well. So again, next week, not a whole lot. Monday, Tuesday, and then Wednesday we get the CPI data, and then the afternoons, the big June Federal Reserve interest rate decision. So again, we might see some low volatility going in, waiting for that Fed interest rate decision. Here's their also their projections. So again, the SEP, the dot plot. Again, I think there'll be a lot more attention paid in that as how much are they going to dial back their cuts. And then we get PPI, jobless claims data, Michigan sentiment. So again, last half of the week, Wednesday, Thursday, Friday, a lot of volatility. Probably again some lighter volume going into Wednesday. Still got some earnings, although again, the vast majority of the important companies, mega caps have reported. We get some uranium, some other energy, so definitely keep an eye on that. You see, earnings definitely matter. So both in a company, both their earnings, their guidance, etc. So again, you can hear how we trade around earnings, sympathy plays, and sectors. So again, check the full calendar. There's Oracle on Tuesday, so there's a large technology on Tuesday. Also cloud, AI, so I'm sure Broadcom. So we still got some important companies in semiconductors, technology, etc. That could impact some of your holdings or what you're looking to trade. So definitely keep an eye. But again, much lighter this week, should be winding down soon. So I hope that all helps. Okay, let me grab another quick drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, they have a number of rewards, promotions for opening and funding an account in Webull. They're offering up to 75 free fractional shares if you open and fund an account with 25K or more. Under 25K, you get 20 free fractional shares of stock. They're also offering a 1.25% cash bonus if you transfer your investments and a 3.5% match on any transfers or new contributions to your IRA. So again, if you're not already using Webull, we use Webull for our market analysis, as you'll see, our due diligence, majority of our trading. So if you're not already using Webull, we would recommend it. And if you'd use our affiliate link in the description box below, you can get all of these promotions, these special offers right now, and also help support our BeachBum trading community, which we greatly appreciate. I'm using the market screen on the online browser version of Webull. So if we look at the histogram of the advancers and decliners from Friday, again, we see a lot more decliners than advancers. Generally, the amount of decline was small, but we've got some significant declines. So again, even though the indices showed mostly flat, again, mostly driven, in my humble opinion, by the Mag 7, NVIDIA, etc. The majority of stocks were actually declining. The net inflow is a little more interesting than it has been. So we see this oscillation in the NASDAQ. So all positive inflows, but again, we see these oscillations in the inflows. Again, we've had a lot of U-turns, during the week. Very hard to trade. Longer-term swing trading, good for scalping. But again, I think this oscillation and inflow show that pretty steady inflow in the NYSE, but a lot more oscillation in the NASDAQ. Again, quick reminder, you can see the near-term earnings calendar in the calendar section in Webull. So we've got YEX, that's another technology, fuel cell, energy, EV-related energy, etc. So again, you can see who's got earnings coming up in the very near term, also in Webull. Let's look at the best performing industries for the week. So software, hardware, Mobileye, semiconductors, some retail, some pharmaceuticals. So again, you can see the dichotomy. So got some advancing, others declining, pretty balanced in general. Aerospace, slightly negative. Beverages negative. Again, REITs took a big, hit with the increase in bond yields. Look at the ETFs quickly. We'll look at in more detail. They think these are emerging markets, small caps, negative. Short on the Russell. Again, Russell's going to be interest rate sensitive. Down on the Dow. Down on the NASDAQ. Down on Bitcoin. So BITI is Bitcoin short. YCS is short the yen. Again, short the Russell. Industries look, pretty red. And very negative in real estate, energy, utilities, technology. Basic materials very red, defensives. So again, from Friday, not a lot of green. So commodities, again, natural gas up. Got some probably oil. Grains positive. Okay. Welcome, Hamster One. Thank you for joining us. Walter Lyons, if I missed you earlier. So we'll look at the futures real quickly in FinViz. Again, we see this oscillation in the Dow. Looks like, it's oscillating around this midpoint. S&P trending, slowly upward, making new highs, correcting slightly. NASDAQ significantly stronger, slight correction. Russell again, pretty flat, breaking down potentially. Nikkei's been pretty flat. Euro stocks did get a pop off that ECB decision, slight correction. DAX been pretty flat. Again, not as affected by that ECB decision. Again, still not a lot of volatility, even though we got that, pop in yields on the jobs data on Friday. Didn't really cause a lot of volatility. Also been getting these daily U-turns. So I think that's dampening volatility. So the VIX is still below 14. Maybe get a little bit of a pop on the Fed interest rate decision, but again, just not a lot of fear, not a lot of volatility. And we see that, oil tested 80, broke down, didn't quite make it to 70, bounced back up right around 75. So that 75 is a pivotal point. If it holds 75, might get a, retest of 80, breaks down below 70, might head down to, or it breaks down below 75, might get a retest of 70. Again, natural gas in a general uptrend with a lot of volatility, but again, generally trending up. Probably get a test to 3, probably get some, volatile corrections, but again, strong uptrend. And we see gold tested that 2,400, and then when we got the jobs stronger than expected jobs data, broke down, didn't quite test 2,300 yet. We'll see if we get a correction, bounce back up, and then continuation of the downtrend. It was consolidating pretty strongly, and then we got that upsurge to 2,400, and then that major correction. Similarly with silver, not quite as much consolidation, but we got that upsurge, didn't, up over 31, 31.50 or so. And then again, that major correction all the way back down below 30. So now we've got some resistance at 30. If it breaks down further, we could get a test all the way down to, the 28 level, although those 50-cent marks, so 29 will probably provide some support, and we might get a correction before that. Similarly with copper trending down now, all the metals are trending down now. A lot of the commodities got a bounce in corn. Wheat rolled over, trending down. Unfortunately, I don't have an ETF to short wheat, just have one to long. Cocoa bounced back up. I guess there's some restrictions. One of the African countries is limiting their exports. Lumber looks like it bottomed and bounced. I looked at the couple ETFs we have in our spreadsheet, cut and wood, to see if those were attractive. Found that they're actually on lumber type companies, timber and lumber companies, and not on the lumber futures. So they really didn't show an attractive risk reward. But if you do trade futures, you might take a look at opportunities there, because lumber futures did look like it made a bottom there. Again, just a quick reminder, you can also now trade futures in Webull. I do not currently trade futures. I don't trade futures in Webull. But Webull does now offer futures trading, and you can find the details of that in our Discord via the link to that message in our Discord. So again, we see the bond yields, bond yields surge, prices dropped on that hotter than expected jobs data. The bond prices were on an uptrend, had broken the previous high. But again, that hotter than expected jobs data caused this dramatic reversal in all the bond prices, upsurge, in all the bond yields. So spike in the DXY, strengthening the dollar, so which obviously negatively impacted most of the foreign currencies. Again, just really can't hold it. The BOJ keeps trying to support the yen, but it doesn't look like that support holds, just keeps bleeding back down. So we'll see if when that eventually does make a long-term upswing. Again, we're still long YCL, which is the ETF long on the yen. The short is YCS. We'll see. Looks like the Swiss franc finally found a top and reversed. All the others on dollar strength. So I hope that helps. Okay, so I'll open up our ETFs Google Sheet. Just a quick reminder, as we go through these futures, etc., identify opportunities to long or short particular topic, commodity, etc. Then we jump over to our ETFs Google Sheet. identify ETFs that we can use to play that trading idea. So long or short, and you can get 24/7 access to our ETFs Google Sheet, as well as our other Google Sheets, our dividend payers, our options, puts ROIC, covered calls, etc. So I've got a couple to talk about. And then if anybody else in the chat has particular topics, ETFs you want to look at, throw those up in the chat. We can take a look at those as well. But let me grab a quick drink and then we'll look at those ETFs. Okay, the first one I want to take a look at is a new one that I've added to the research sheet in our ETFs Google Sheet. This is EWM. This is an ETF on Malaysia. There was news out that Microsoft is now also building a data center in Malaysia. So I went over to the ETF database, which again, you can find links to the ETF database both in our ETF Google Sheet and also on our homepage, which is beachbumtrading.com, bum without the U. And you can also find the other resources we're going to talk about. So here's the ETF database. We're also going to talk about the Fed rate monitoring tool and the CME FedWatch tool. And you can also find those under reference links. So again, our link section of our homepage, a great resource for you to tag. And then you can find links to all these tools via the link section on our homepage as well. So if I go over to the research tab of our ETFs Google Sheet, I've added Malaysia, so EWM. So again, an ETF on Malaysia. We could see the current price about 23. Got a 52-week high and low of only 19 and 23. So not a whole lot of risk reward short term, but longer terms got some upside to 51. So if I look at the profile for that in FinViz, so again, you can quickly reference their profile in FinViz via the link in that column in our ETF database. So we see it's relatively high right now, so it's already kind of run up. Zoom out a little bit. So it's got a high of 24ish, so a little bit of potential upside. Longer term, again, as high as 51. So for a very long term, looks relatively attractive. Looks like it's approaching this longer term moving average. So even though it's relatively high near term, it's got a lot of long term potential. It is optionable. It pays a small dividend. You can see the breakdown. So it's financial utilities. See what it holds. Malaysian bank, public banks, so financials, some metals, aluminum, gas, some healthcare, etc. So again, I thought that was interesting, and now we have an ETF we can use to also trade Malaysia. So using the MSCI Malaysia Index, component securities, underlying index, large and mid cap segments of the Malaysian market. So again, now we've got one to also test or to also potentially trade Malaysia. Previously, we had added and talked about one to trade Indonesia. So I also looked at that one. Again, you can do a find on stocks or ETFs in our ETF Google Sheet just to do a Control F find. So again, Indonesia. We look at that one. Again, we had Malaysia going up, whereas Indonesia going down. So it might be worth seeing what the news is, what the difference is in between Malaysia and Indonesia. I thought Microsoft or somebody was also building a data center in Indonesia. I think we talked about that when we added that one. So again, looks like Indonesia is going down and Malaysia is going up. So I think that's kind of interesting. So Easy Mike also mentioned, I think, one of the Mexican ones wanted to look at or EWW. So here's EWW. This is the standard one on Mexico. Um, you can see what the risk reward profile of that one is. I'll bring that one up in a second as well. And then I want to also talk about MEXX. That's the one leveraged long on Mexico. It's the one we have in our main sheet, as it's, in my humble opinion, has a better risk reward. But if you don't want a leveraged ETF on Mexico, then EWW. As we'll see, there's a significant correction downside in the Mexican market based on their election. So when they had their election, it dropped precipitously, down to that support line, bounced pretty quickly, and then rolled over again on Friday. And it looks like it now broke that bottom support. So we're watching again this one. We'll talk about it again tomorrow using MEXX. But again, if you don't want the leveraged ETF, then EWW. But again, after that quick correction, it broke down below support. It looks like it might drop, and we'll see how far down that goes. So it looks a little uglier on the weekly. So again, we've got some significant downside potentially, and then maybe a bounce around that 52 type area. So again, still relatively high, got some risk, but again, some potential for those short-term bounces. And if you caught that drop and bounce, made some decent money. So again, if I look at MEXX, again, the leveraged one that we have in our main sheet. So here's MEXX. Again, it's got, higher risk reward profile because it's a leveraged ETF. So its direction, it's going to have, similar charts, just, with more juice, as the Crow or Easy Mike would say, since it's a leveraged ETF. So again, broke down below that lower support line. Again, just got a higher risk reward as due to the leverage. So it's a 3x long. So again, if you're playing short term particularly, you can benefit from that additional leverage. If you want to play longer term, you might not want that leverage, as we don't really know where the bottom's going to be in MEXX, which is what we're going to be watching, waiting for it to find a bottom, reverse trend. But again, if you want to play for the short-term bounces, MEXX does have a higher leverage, higher risk-reward profile than EWW. So I hope that all helps. What was the other one I know you wanted to talk about India too, Easy Mike. So India also had elections. So we have a number of ETFs for India. Again, I don't have a short on Mexico. I don't have an ETF to short Mexico, just those two to long. We also have a video. There's another one that we also compare, and we have a video about the Mexican ETFs that you can listen to. And then we've also got them on India, so you can see the various ETFs to trade India. So INDA, it's a non-leveraged typical one. INDY, India 50. So you can again see the risk reward profiles of all the various India ETFs in our ETF Google sheet. Then we've got there's a again a leverage long, so a 2x long, and also an internet and commerce. So if we look at the INDL, which is again our leverage preferred one due to leverage for longing. Again, I don't have any to short India. So again, we see that volatility around the election, dropped down, bounced off the support, bounced back up. So a lot of volatility. Again, if you want to play those bounces long, otherwise, India market's generally pretty high. We see that long wick, quick recovery, definitely in an uptrend. So broke out of the previous highs, does have, significant upside still. So again, you can check out the various India ETFs and pick the one with the type of, leverage, risk reward, composition, etc. that you'd like. Someone's mentioning, MD's mentioning PAVE. Let me look at what PAVE is real quickly. And then I need to get to our topic for the week to look at the Fed interest rate decision. So here's an infrastructure and development ETF. Let me see if I have it in our sheet right now. So again, you can do a find in the main sheet. If it doesn't show up there, check the research sheet. So I don't currently have PAVE. Looks like it's pretty high right now. Had a nice run. Looks like it's rolled over, headed back down. So range 28 to 40 or so. It is optionable. So it's quite high right now. So again, might be it's in a nice nice uptrend. So if you think that's going to continue, if you want to buy the dip, if you think that trend's going to continue, see the composition. So it's eat and train. So again, infrastructure type plays. So again, just FYI, you might want to think about any risk with the election and how any change in regime might impact that. So again, just something to consider. But again, a good point to bring up in terms of a infrastructure play. Thank you for sharing that, MD. Okay. Otherwise, it's our typical set of pairs for trading technologies. ARK-K, long, SARK, short, LabU, long, LabDB. We've got longs and shorts for cryptocurrencies, for China, yin and yang. Oil, gush and drip, and got natural gas, boil, long, cold, short, etc. So again, highly recommend, you join our Patreon, get access to our ETFs Google sheet. Again, if you have any idea, you can just search for what ETF, what direction you want to play, what level of leverage, risk reward, etc. We do have single stock ETFs like Tesla, Nvidia, etc. And again, if you don't find it in the main sheet, then you can also find them on our research sheet. And if there's anything that you want us to potentially add, please let us know in the comments to this video, in our Discord, etc. We can plug them in, do the research, cover them in a live stream or a video, and potentially add those to our ETFs Google sheet as well. So let me grab a drink and let's talk about our theme for this week, about how to make money trading the June Federal Reserve interest rate decision. Okay, again, our theme for this week and the big news is going to be the June federal interest rate decision on Wednesday. Again, we get the dot plot, their economic projections. I think, again, that will be a major factor in terms of, when are they going to cut or hike, at what rate. Previously, they said 3. And my humble opinion, again, I will see what the probabilities say in the Fed rate monitoring tool and the CME Fed watch tool. And then I guess I'll hold my opinion till after we look at those. Again, just a reminder, you can find links to these tools also in the link section of our homepage. So you can refer to these probabilities change, with the economic data, all the time. So you can check what that impact is in these tools via those links. So if we look at the Fed rate monitoring tool first, again, we've got a countdown clock. Right now, as we can see for June, no change, 98%, no change. So they're not going to cut. They're not going to hike on Wednesday. Again, very tiny chance they'll cut. Again, I don't think they'll make any change either. Again, and we look at July, 91%, no change. So only 8% chance of a cut in July. Go out to September. So September is a little more balanced, but we still have almost 50% chance of no cut, 47% one cut, 4% two cuts. Go out to November. So now we've got, higher percent chance of one cut, 16% of two. Go out to December. So now we've got a 40% chance of one cut, only a 14% no cuts, 35% two cuts, only 10% chance of three cuts. So again, you can see these probabilities have dialed back significantly. Early in the year, the market was talking about 6 or 7 cuts, which again, in my humble opinion, was delusional at that time. And now, even though the Fed said 3 cuts, now they're dialing it back significantly. And it looks like the probability is, maybe 2 by the end of the year. Probability is, possibly in September, but the higher probability is we wouldn't see a cut until November. That's like right after the election. So we also look at the CME Fed Watch tool. Again, another version of these probabilities. Again, you got a countdown calendar. Again, you can hear more details about how to use each of these tools via the links to our videos and the notes, and also find them on our BeachBum trading channel. So again, we've got more detailed videos on how to use both the Fed rate monitor tool and the CME watch tool. But if we look at the CME watch tool, again, June, 97%, no change. July, 91%, no change. September, still 49%, no change, 46% one cut. So again, they're projecting, possibly one cut in September. Now the probabilities switch a little bit, 47% one cut, 35% no cuts, 15% two cuts. We get out to December, still the highest probability, still only one cut. But a significant probability of 2, small 3, small no change. So again, also in the CME watch tool, you can also see the dot plots. So again, you can see the spread in the dots, and also the probabilities going so longer range. So we'll see how these dots change. So the mean for 2024 previously was about 4.75, which would give us 3 cuts. So again, we'll see how this changes when they come out with their economic projections on Wednesday. And again, my humble opinion, I think both in the dot plot as well as in Powell's comments, I think they're going to significantly dial back on rate cuts for this year, whether they dial back to 2, 1. Again, my humble opinion, not financial advice, but I think they may dial back all the way to 1. And they will argue that inflation is still hot, inflation is still smoldering. They need to stamp out inflation. The job market continues to be relatively resilient, so they don't really need to worry about unemployment surging, even though we got that 4% unemployment number. The underlying data doesn't seem to support a significant erosion in the job market. So again, I expect both their dot plot and Powell's comments are going to significantly dial back rate cuts, and the market, and particularly the interest rate sensitive sectors, real estate, utilities, small caps, biotechs, if they dial back rate cuts, that may have a significant negative impact on those. Bond yields pop up, bond prices pop down. We'll have to see what impact that has. Probably stronger dollar, weaker gold, silver. But again, we'll see what happens around their comments. Again, watch the dot plot at 2 o'clock. Again, their decision, don't expect any change. But again, Powell's comments and how much they're dialing back rate cuts, I think will have a significant impact on the market. And again, if they dial back significantly, we might get a pretty negative reaction. So trade accordingly, protect your profits. So I hope that all helps, and love to hear all your feedback. What do you think? What do you think the Fed's going to do? What are the best ways to make money trading around this June federal interest rate decision? How much do you think they're going to dial back rate cuts? Again, love to hear your feedback in the comments and our Discord, etc. Again, we've been talking about how to make money trading in June and the spring, and you can hear all of those discussions via the video links in our notes. Again, we've talked about, the market's very toppy. We're seeing, these daily U-turns, a lot of rotation in and out of the Mag 7, in and out of various sectors. So again, better trading for short-term traders, day traders, scalpers, and you can trade those sector rotations, I think, effectively using some of the tools and ideas that we put forward. Again, tomorrow we'll talk also about dividend payer stocks and option strategies, additional ways to make money trading while we wait for better swing trading opportunities to manifest. So we hope you'll come back again tomorrow. Same bat time, same bat channel, 10 a.m. On Sundays for part 2 of our weekly trading game plan. And again, we'll be using these trade ideas, our market analysis, etc., to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Again, we'll talk about dividend payers and option strategies to also make money trading around the June federal interest rate decision and in general. So we hope you like this content. We hope you'll smash the like button and help us share our content. Please share our content with your fellow traders and friends. Again, invite people to join us on the weekends for these live chats, these live streams, and also join us in our Discord. Again, if you have any questions, comments, suggestions for improvement, just further discussions, we'd love to have you join us in our Discord, and we can continue these discussions 24/7 in our Discord. Again, our Discord's free to join. You can find a link in the description box below. Also on our homepage in the links section. And our homepage is beachbumtrading.com. Also, you can find links to our social media. So if you have questions, comments, you can also find links and contact us via any of our social media sites. So again, thank you to everyone who participated in the chat today and who's watching after the fact. And again, we hope to see you again back tomorrow for part 2 of our weekly trading game plan for June 10th through June 14th. Thank you again and have a great day.